Hello everyone, my name is CMA Panktivani. Welcome back to CMA modules. Today we are going to record a video lecture for direct tax amendments. These amendments are applicable for June 23 exams. So let's start. I have downloaded this document from our institute website, and it's a 16-page document. I'll share the document link in the description box. So there are 3-4 topics covered under this document. What I'm doing is I'm covering the smaller topics under this lecture, and there are 2-3 bigger topics that I'll be taking in separate video lecture. So first topic which I'm taking is a reduction for time limit for submitting ITR 5. That is on page number 16 of this document, last page. So with effect from 1st August 22, in respect of any electronic transmission of return data, the return should be verified through e-verification or submission of ITR 5. So what we are supposed to do is, after filing our ITR with the authorities, we are supposed to e-verify our document. Okay, we are supposed to e-verify. Such verification should be done within 30 days. Earlier it was 120 days. Now they are asking us to complete this within 30 days. From the date of transmitting or uploading the data of return of income electronically. From when? From the date of transmitting or uploading the data of return of income electronically. From the day, today if I upload the data to the website, so from today within 30 days I am supposed to e-verify my details. Further, where ITR data is electronically transmitted and e-verified. Further, where ITR data is electronically transmitted and e-verified. ITR 5 submitted within 30 days of transmission of data. In such cases, the date of transmitting data electronically shall be considered as date of furnishing return of income. However, where ITR data is electronically transmitted but e-verified, or ITR 5 submitted beyond the time limit of 30 days of transmission of data, in such case, date of e-verification or ITR 5 submission shall be treated as date of furnishing return of income, and all consequences of late filing of return under the Act shall follow. So here the first point, this is my first point, then comes my second point. So further, where ITR data is electronically transmitted and e-verified, I am transmitting my data and I'm e-verifying, submitted within 30 days. What I'm doing is I'm submitting within 30 days of transmission of data. In such cases, date of transmitting data electronically shall be considered. Date of transmitting data electronically shall be considered as the date of furnishing return of income. Suppose today I transmitted data to the income tax authority website, so today will be considered as date of filing of ITR. However, where ITR data is electronically transmitted but it is not verified, it is not e-verified within the time limit of 30 days, then in that case e-verification of ITR or e-verification or ITR submission will be treated as date of furnishing the return of income, and all consequences of late filing of return will apply. So if it is not done, ITR is filed but e-verification is pending, then in that case you will be considered as defaulter, and all the consequences of a defaulter will be applied to you. So here there are two cases: filed within 30 days and not filed within 30 days. There are two cases, and first one is they are directing, under first point they are directing you that you are supposed to file within 30 days. So first point, second and third, 3 points here. So that was reduction of time for submitting ITR 5. That was my first amendment. Now coming to second amendment. Second amendment is related to conditions for claiming exemption in respect of COVID-19 related receipts under section 56(2) clause 10. It comes under notification number 92 dated 5th August. So what is this section about? Let us first try to understand this section and then this notification. So whatever amount I receive or from government authorities or from any authority, that amount is exempt to me. Okay, whatever amount I get related to COVID, that amount is exempt to me. Now, before this point also, I'll take this section. What all receipts are covered under this section? So anything, any amount you receive in cash up to 50,000 is exempt, but beyond 50,000 it is taxable, right? Beyond 50,000 it is taxable for you. I have worked out. So what does section 56 subsection 2 clause 10 says? That any amount in excess of 50,000 is taxable. But if it is received for COVID, against COVID conditions, then it is exempt. But what should be the conditions? Those conditions are mentioned. These conditions are mentioned here via notification number 92 dated 5th August. So there are two conditions. So first condition is central government specifies following conditions. First condition is death of the individual should be within 6 months from the date of testing positive or from the date of being clinically determined as COVID-19 case, for which any sum of money has been received by member of the family. So that is the first point. Death of the individual should be within 6 months. Then comes family member of individual shall keep a record of the following documents. So what all are the documents? COVID-19 positive report of individual, medical report if clinically determined to be COVID-19 positive through investigations in a hospital or an inpatient facility by a treating physician. Medical report or death certificate issued by medical practitioner or a government civil registration office in which it is stated that death of a person is related to coronavirus disease. So these are my 3 points, and these 3 points, if these 3 conditions are satisfied, then I can claim exemption for any amount received against COVID. So the conditions are very simple. First one is related to death, and second one is related to family members. So family members providing documents, they are mentioned, they are maintaining documents related to COVID-19 positive reports. Fine. So these are my 2 conditions. Now next amendment, so that was the second amendment. Third amendment comes non-applicability of provision of section 2061G. So this section, what is this section about? Let us first try to understand this section, and then we'll try to understand this amendment. So this section is nothing but I'm an authorized dealer. I have an authorized dealer. Okay. For example, bank. And I'm a buyer. So what I'm doing is I want to buy some dollars. Okay. I want to buy some dollars from authorized dealer. I can do that. I want to buy some dollars from authorized dealer. I can do that. So suppose I want to buy $1 lakh, I can buy $1 lakh plus I have to collect TCS and pay. So along with dollar amount, I need to pay TCS also. Okay, so that's this section about. So authorized dealer needs to collect TCS at the rate of 5% up to 7 lakhs. Is exempt. Beyond 7 lakhs it is taxable. So for example, your payment I'm supposed to make of 10 lakh rupees. Okay, so up to 7 lakh it is exempt. For over and excess, over and above 7 lakhs, for 3 lakh rupees I'm supposed to collect TCS at the rate of 5% and pay it to the authorized dealer. So above 7 lakhs then 5%, and TCS on such excess amount it will be 5%. So overseas payment, if I'm going for any overseas payment, then in that case I'm supposed to collect TCS at the rate of 5% and make payment. So this clause, this TCS clause is not applicable to non-resident. So non-applicability of provisions of section 206C1G. Central government notifies that provisions of section 206C1G shall not apply to a person being a buyer who is a non-resident and who does not have permanent establishment in India. So this TCS section 2061G is applicable only for Indians, only for residents. Not applicable to a buyer who is non-resident and who doesn't have permanent establishment in India. That's my third amendment. Let's go for fourth one. Generally, for obtaining PAN, one has to apply in form number 49A. However, specified applicants may apply for allotment of PAN through a common application form notified by central government. So that's the notification. Then comes quotation of PAN or Aadhaar number. So where you are supposed to quote this. So they have given 2-3 points here. Following are specified transactions. Further, PAN or Aadhaar number is required to be quoted on any document pertaining to such transactions. If I go for a cash deposit or deposits aggregating to 20 lakhs or more in any financial year in one or more bank account of a person, cash deposits or deposits aggregating rupees 20 lakhs or more in any financial year in one or more account of a person with a banking company or a cooperative bank to which Banking Regulation Act 1949 applies, or a post office. Cash withdrawal or withdrawals aggregating of rupees 20 lakhs or more in any financial year. Here it was deposit, I'm depositing amount, here it's withdrawal. So cash withdrawal or withdrawals, one withdrawal or more, one withdrawal of 20 lakhs or aggregate of withdrawal of 20 lakhs or more in a financial year in one or more account of a person with a banking company or a cooperative bank to which Banking Regulation Act 1949 applies, or a post office. So that's my second point. Opening of a current account or a cash credit account by a person with a banking company or a cooperative bank to which Banking Regulation Act 1949 applies, or a post office. However, rule is not applicable in case of central government, the state government, or a consular office. So these are the 3 points where I'm supposed to quote my PAN and Aadhaar number. So that was notification number 4. 1. COVID condition notification amendment is 2. 206C1G is third amendment. Fourth amendment was related to PAN and Aadhaar. So 4 amendments we have completed. I'll take next one, that is 194R. Now what is 194R? A newly added section by the income tax. That section is related to TDS. I'm supposed to deduct TDS. So let's have a look to that section and then the content given to us by Institute. So section 194R is newly added by Finance Act 22 with respect to with effect from 1st July 2022. Now any benefit or perquisite, whether in cash or in kind, any benefit or any perquisite, whether in cash or in kind, arising out of business or profession, you are claiming expenses. If you are claiming expenses related to that income, then your perquisite amount is more than 20,000, then you are supposed to deduct TDS at the rate of 10%. Let's take an example to understand this, and then we can refer to the content of Institute document. So I'm an employee and I worked very hard to earn a turnover. My employer had specified respected turnover, suppose 1 crore, and I helped my employer to achieve that 1 CR turnover. When that 1 CR turnover, I helped my employer to achieve 1 CR turnover. So when this 1 CR turnover is achieved, what my employer did, my employer gave me a Thailand trip. Okay, what my employer did, my employer gifted me a Thailand trip. This was of rupee 1 lakh. So when my employer is gifting me a Thailand trip, this Thailand trip of 1 lakh will be attracting 10% TDS. Why it will be attracting a 10% TDS? Because it is more than 20K. It is related to my business and profession. It is a benefit or a perquisite arising to me. It can be in cash or in kind. So earlier people used to enjoy by gifting, by giving benefits, by giving perquisites to one another. So government have closed that loophole as well. So now no gifting, no benefits, no perquisites. If you want to, you can, but it will attract TDS. Same thing is mentioned here. And the document comes with in a question answer form. So is it necessary that person providing benefit or perquisite needs to check if the amount is taxable under clause 4 of section 28 of the act before deducting tax under section 194R of the act? No. Is that necessary? That person needs to check whether it comes under this section or no? No, it should be benefit or perquisite. Is it necessary that benefit or perquisite must be in kind for section 194R of the act? No, it can be in cash or it can be in kind. Whether sales discount, cash discount and rebates are benefits or perquisites. So sales discounts, cash discounts or rebates allowed to customers from the listed retail price represents a lesser realization of the sale price itself. To that extent, purchase price of the customer is also reduced. So sales discount, cash discount or rebate is nothing but that is allowed to the customer just to reduce my price. That is allowed to the customer just to reduce my price. Logically, these are also benefits though related to sales and purchase, since TDS under section 194R is applicable on all forms of benefits or perquisites. Tax is required to be deducted. However, it is seen that subjecting these to tax deduction would put seller to difficulty. So to remove difficulty, it is clarified that no tax is required to be deducted under section 194R on sales discount, cash discount and rebates allowed to customers. That is my first point. Then comes my second point. There should be another situation where a seller is selling its items, from its stock in trade to a buyer. The seller offers 2 items free with purchase of 10 items. What is seller doing? Offering 2 items free with purchase of 10 items. In substance, the seller is actually selling 12 items at a price of 10 items. Let us assume that the price of each item is 12. In this case, the selling price for the seller would be Rs 120 for 12 items. For buyer, he has purchased 12 items at a price of Rs 10. Just like seller, the purchase price for the buyer is 120 for 12 items and he is expected to record so in the books. So in nutshell, what they are trying to tell us is a seller is selling 12 items at a price of 10. So 2 items he is giving as a benefit. So should we deduct TDS under this section? No, we should not. It becomes difficult for seller, so no tax is required to be deducted under section 194R when items are sold free of cost in order to attract more sales. However, it is clarified that situation is different when free sales are given and the above relaxation would not apply to a situation of free samples. So even free samples will not attract TDS. Similarly, this relaxation should not be extended to other benefits provided by seller in connection with sales. Example, when person sponsors a trip for a recipient for his or her relatives upon achieving certain targets, or when a person provides free ticket for an event. So here employer is not giving for employee himself, employer is giving for relatives of employee. The relaxation provided from non-deduction of tax for sales discount and rebate is only on those items and should not be extended to others. It is further clarified that these benefits or perquisites may be used by owner, director, employee of the recipient entity or their relatives who in their individual capacity may not be carrying on business or exercising a profession. However, tax is required to be deducted by a person in the name of recipient entity since usage by owner, director, employee, relative is by virtue of their relation with the recipient entity, and in substance the benefit perquisite has been provided by person to that recipient entity. So here it is further clarified that these benefits or perquisites may be used by owner, director, employee of the recipient entity or their relatives who in their individual capacity may not be carrying on business or exercising a profession. Okay, that's the key point here. To illustrate the free medicines, a sample may be provided by a company to a doctor who is an employee of a hospital. So again, one more example is taken here, which that example is also easy. Hospital is providing few medicines to doctor. In term, doctor is just promoting. Hospital is promoting its medicines. So and doctor is not asked to give that medicines back. If doctor is giving that medicines back, then it is no TDS will be deducted. But if doctor is retaining that medicines, TDS will be deducted. So that point is covered here. How is valuation of benefit or perquisite required to be carried out? Next question. The valuation would be based on fair market value of the benefit or perquisite except in following cases. So except in following cases, it would be on fair market value. Otherwise, it will be fair market value. But below mentioned cases, there are 2 cases which are mentioned. For them, it will be the mentioned amount. Otherwise, it is fair market value. So benefit or perquisite provided for provider has purchased benefit or perquisites before providing it to the recipient. In that case, purchase price shall be value for such benefit or perquisite. So here comes the purchase price. If you are taking purchase price, if you are considering purchase price as benefit value, then purchase price will be value of benefit or perquisite. And if you are charging price that it charges to its customers, it will be that charges will be the value of benefits or perquisites. So there are 2 things here. First one is purchase price and another one is the prices that is charged to customer. Okay, so these 2 points. I hope you are comfortable with topics which are discussed in this lecture. Please like, share and subscribe. There are a few other points also which needs to be covered. I'll be uploading a short video related to it, lecture number 2. Thank you.